Hi guys, this is Jazz aka Trend Trader for you. In this video I'm going to talk about how to actually look for stocks that are making all-time lows or all-time highs, and also going to go into talking about 52-week low and a 52-week high. So let me show you a couple of websites where I can customize to a point where I can pick stocks based on my criteria. So first one is your finviz.com. Again, these are free resources out there. Feel free to take the best benefit out of them. They're there for some kind of a purpose to fill. So go to finviz.com, then you select on screener. Once you select on screener, you'll get this page. Click on all. This way you're looking at descriptive, fundamental, and technical. In here, there's one very simple way to basically look for all-time weekly low, 52-week low. That's it. That's all you have to do. New low on a 52-week. You got 253 stocks in here. Okay. Now, let's just say you're looking for stocks that are over $10. Okay, from 253 we're down to 148. Okay, and you can look for a little bit more, you can refine it a little bit more since you're trading over $10, and maybe you want to look for something that is tradable, that has liquidity in it, so over 300k or 500k, whatever you want to choose. So we're down to 80. Okay, and you can play around with this. You can go into fundamental factors, right? You can also go into fundamental factors and add whatever you need to do based on what you have already had added on there. And you can combine the fundamental, technical, descriptive, whatever you need to do. You can all combine it. Then you can start looking at the stock. So if you can look, ADM is almost it's actually a 52-week low on there. You can see AMU, obviously the 52-week low. BTU all the way down. CHU all the way down. I remember I used to trade the CHU, say China Unicom, and that's 1204. And again, these are all the stocks that you're gonna get which are making all-time 52-week lows, right? Not all time, but a 52-week high or low. And same way, you can just pick whichever ones are making 52-week high, and you only have 43 in this criteria. Okay, the other website is barchart.com. Again, I'm not promoting anything. I'm not a member or anything on either one of those. Just showing you what's available, free of any charges. On here, you can actually pick all-time lows. Okay, these are all-time lows that actually made it low as of today, supposedly, right? And as you can see, the date on it, let's see, 12/3, right? 12/3/2015. Then you can also pick all-time highs. Okay, that's what you get out of here on the all-time highs. Again, you have more than enough choice, so you can go in there and start looking at all these stocks. If something fits your criteria, maybe try to take longs in the all-time highs and try to short with all-time lows. Okay, so I'm gonna actually divide this video into two parts, where the second part will be for the people who actually got the swing trading course. So, but I'll be providing enough in here so that you can benefit from it. You can benefit from the talk. You can benefit from the psychology behind the 52-week low or all-time low. Okay, so let me take you on to the chart. Okay, this is the Thinkorswim my trading platform. So what I'm looking at is GPro here. Okay, mostly everybody probably knows about GoPro, right? At one point at IPO kept on going up, then just kept on coming down, right? So let's talk about something. Okay, let's talk about the psychology behind it. Okay, if let's just say Jazz, he bought at $61, right? Then Mike bought at $48. Okay, then Kevin came and he bought it at $34.69, right? These are people who are losing money, right? I'm losing money, somebody else is losing money. Everybody basically from all the way 98, if they're holding, right? The smart trader would get out based on technical analysis. but let's just say everybody's holding this, right? We can't say everybody, but majority of the people that are holding it, they're losing money, right? So just think about it for a minute. As it's making all-time lows, in fact this made an all-time low yesterday, right? And all these people that are losing money, what are they thinking right now? Their thought process is, for somebody who bought at 25.13, okay, Richard is saying, you know what, I bought it at 25.13, I'm losing, okay, I'm losing about whatever, you know, $8 or $7 on it, and all I want is to get out of this stock. Okay, that's all I want, to be out of this stock, because you know it's been draining, been putting all-time lows, lower highs and lower lows, right? All I want is to be out of it, right? Even this guy, okay, even Rich in here, okay, he's even thinking about it at 20. I just want to be out of it. So he's waiting, or he or she, anybody could be waiting for, for this stock to come up so they can break even. Okay, that's the trading psychology behind it. Okay, so people who get in the stocks and start loving, the fundamentals, and loving that the company, okay, this is the best of best out there, there's nothing else. Okay, you gotta look at the chart. The chart is 100% correct at all times, and as soon as, what do you think, if the stock goes up, is it gonna just shoot up? The chances of that is very slim. The reason, because all these people that got in here, they want to be out. So as soon as the price goes to 20, this person want to be out. Okay, as soon as the price goes to 29, this person needs to be out. So what's going on? What is the thought process at that point? What is the trading psychology? How is the trading psychology playing at that point? Is following, which is people are going to take either profits or cover, okay, or they're going to say, I'm going to break even, which actually makes the sentiment bearish, right? If the price comes up in here, he is selling it to somebody who is willing to buy, but it's actually making the sentiment more bearish, because all these people, they want to be selling, they just want to be out of the stock. So this is where the technical analysis plays a huge role. You need to find where the support and resistance is, and where exactly is the confluence of the sentiment is in balance, or where the confluence is in imbalance, right? In balance is price is going to be boring. Imbalance is where price is going to spike up or spike down, or have a really nice move to the upside or really nice move to the downside. If you're in balance, prices go sideways, right? If the price is out of balance, prices actually start making either higher highs, or prices start making lower lows or lower highs. So understanding that when the price goes up, the traders are going to either break even, or they're going to take a little loss and be out of that trade, and that will actually push the stock even more down. So everybody's a loser right now, right? Everybody's a loser. They're waiting for the price to come back up. Now let's talk about something. Let's pick up a stock which is all-time high, which is, let's go in here, okay, AFG. Let's just put it in here, AFG. Okay, who is a loser in here? Just think about it. Is this guy a loser? Is this guy a loser? Is this guy a loser? Right? Is only person who's a loser is above 73.57. That's where the price closed at, right? Everybody else above that is a loser. But how much of the bullish sentiment is in this stock? Majorly, right? Almost, you can say 99.5%. Only 0.5% are losing, which makes the stock bullish. As soon as the price comes down, there's going to be more buyers coming in. So just think of it in a psychology where, let's just go back, okay, go back to I don't know, go back to maybe 2000 or something, when the flip phones came out, right? I was in college, I had the flip phone, and I thought I was the coolest guy on the campus or the college, because I had a flip phone. But am I gonna be the coolest guy if I have a flip phone in my hand, and if I walk out, obviously to people who are computer savvy, or maybe the nerds are like, oh, what the hell is this guy doing? He has a flip phone, and where he should be having a smartphone, right? So it creates demand. All I'm trying to say is that point there was demand for flip phones. As we go up, right? As we go up, there's new factors that play in. iPhone 1 came, iPhone 2 came, iPhone 4 came, 5, 6, 7, whatever, right? Samsung Galaxy came, S1, S2, S6, S6 right now. So that is making a demand. So if this charting analysis works the same way, that's how the trading or the other work works as well. Okay, so you need to understand that demand is being created in an uptrend, okay, and supply is being created in a downtrend. There is so much supply for G Pro for people to take a bite at it. If it goes up, there's all supply in here, right? Where is the supply in here? Okay, AFG was AFG, yeah, AFG. Where is the supply in here? There isn't any supply. It's all demand, demand, demand. Is if it comes down, it's gonna obey the trend to the upside, causing it to even push higher. So why are people trading 52-week lows and 52-week or all-time lows? They're thinking the stock is cheap. Wrong. Stock is cheap, but it could get cheaper. Cheaper could get cheapest, and cheapest could get bankrupt. Okay, so understand that when you're trying to pick a bottom, I'm getting into the other part of it. If you're trying to pick a bottom, you need to see, okay, the Nokia or the flip phone market is totally out. Those phones are not not sophisticated or not in demand anymore. But they could be working up some kind of newer deal where they're coming up and competing with iPhone or Samsung or whatever it is out there, right? But if that news comes out, okay, and if they're at the 52-week low, you need to see how the charting is working. Okay, you need to see and go back, okay, how can I call the bottom? And this is where I'm going to kind of stop here and let that go and kind of absorb what we talked about in here, that trading psychology is must to understand in charting analysis. Okay, all this candlesticks that you see in here, it's creating demand, it's creating an opportunity for a potential buyer to become that best of that best at that point where they could buy it at the swing low and sell it at the swing high. So potential buyer is going to become a seller over here. Okay, so hopefully that kind of helps why you don't need to trade all-time lows, rather trade something in a trend, or even trading something all-time high but looking for a nice area where if the price comes in, you're buying at the swing low, not at all the way at the high. Okay, so I'm gonna leave it to that, and then if you need any more help, just contact me and we'll go from there. Okay.